So in this video, I'm going to be talking about the 5 stocks I currently own. And what I want to do in this video is give you guys my #1 reason for why each of these stocks are in my personal investment portfolio. Now, before I get into the video, I just wanted to mention that I know this is probably a video that's going to get a lot of views because a lot of people are curious of what stocks I own. And I also expect it to get a lot of hate comments, people saying, why do you own these stocks? And what I want to tell you guys is that these are the stocks I personally see value in, and these are the companies that I want to own. It doesn't mean that you need to buy these companies, and it shouldn't mean that you need to buy these companies because everybody out there who's investing in the stock market needs to be making their own decisions and doing their own research and not simply being a piggyback investor. This is one of the reasons why I've been kind of hesitant to be sharing the stocks that I own, because I do worry about people simply hearing, oh, this guy owns this stock, I better buy it. That is no way to invest. And so I just wanted to throw that out there to you guys. If you are investing in the stock market, make sure you are doing your own research, your own due diligence, and you're not simply piggybacking off of other people. But that being said, I'm open to hearing whatever you guys have to say about my picks. And let me know what you guys think. If you own these stocks, if you are planning on buying them, if you wouldn't touch them with a 10-foot pole, I would love to hear what you guys think. And then the only other thing I want to mention quickly, if you guys are interested in grabbing a completely free stock worth up to $1,000, Webull is running a promotion. It's the top link in the description below. If you open an account with them, all you have to do is open the account. You don't even have to fund it. They're going to give you a completely free stock worth up to $1,000. This is United States only, so if you are not from the US, unfortunately, this promotion does not apply to you. It's the top link in the description. It is an affiliate link. You guys do not have to take me up on this offer if you don't want to, but that option is available if you are interested. So anyways, let's go ahead and get into the video and talk about the 5 stocks I currently own. #1 is one that a lot of people probably don't know that I own unless you've been watching this channel for a number of years or at least a couple of months. I don't think I've talked about this in a long time, but one of the stocks I own is a company called National Grid. They trade under the symbol NGG. It is a UK-based utility company, and so those shares are purchased through an ADR, an American Depository Receipt. Nothing that you guys really need to know, but it's kind of interesting. And the reason why I own this company is because I got to buy it super cheap when I was an employee there. So when I worked at National Grid, I was able to basically take a portion of my paycheck and invest it into the company stock, and I was able to buy preferred shares that were at a discount to the market. And when I was buying shares, our stock was trading at about $70 per share, and I was able to buy shares at around $58 to $59. Now, that's about what National Grid stock trades at this point in time, but they're also a very, very good dividend stock. So I own shares of National Grid. The reason why I own this company is because boring is good sometimes. I think it's a great dividend pick. I think they pay a very strong dividend. It's a very boring investment. It's a company that's experiencing virtually no growth. I mean, what growth are you going to see in the utility industry? But if you're a dividend investor, it might be a company you want to look into and do some more research. But because I was able to get it at a good discount, I bought a lot of shares in the 2 years that I worked there. And I have that set up as a dividend reinvestment, so all of my dividends from that particular stock go back into the issuing stock. I don't plan on ever selling that or ever touching it. I plan on having that be a completely separate money-making entity for me, so it just keeps on rolling that dividend back into the issuing stock and allowing me to earn compound interest. So that is the first stock that I own. #2 is Alibaba, trades under the symbol BABA. And I'm also going to include #3 here, Facebook, because I own both of these companies primarily for the same reasons. There's a lot of reasons to own Alibaba and Facebook, but the #1 reason, in my opinion, is the fundamental strength of these companies, particularly looking at Facebook. So starting off with Alibaba, if you take a peek at the balance sheet of this company, this is a company with $32 billion in cash. They have $114 billion in assets and just $56 billion of total liabilities, giving them a debt to asset ratio of 2 to 1, which is a very strong number in my opinion. There's a lot of companies out there, including ones I'm invested in, that have a sizable debt load. And especially when you're seeing, slowing of the economy, if that were to happen, you want to be investing in companies that have a good cash pile and also have a low debt load, because that's what's going to allow them to make it through that time period, is not having all of this debt to pay back. And so I like Alibaba because they basically have $2 in assets for every $1 they have in liabilities. Facebook, primarily the same exact reason. It's a company that has a large cash pile, but their debt to asset ratio is bananas. I mean, $85 billion in assets compared to $10 billion in liabilities with $0 in long-term debt. There's not a lot of companies out there that have no long-term debt. But Facebook is one of them, which means that for every dollar that Facebook owes, they have $8.50 in assets to back that. So they have immense financial strength. And you might be wondering, why does Facebook have such an attractive balance sheet? It's because their business model is amazing. They don't have any inventory. They're literally just offering web services, kind of like Google is, and they're able to run ads and generate massive amounts of cash from that platform. So very, very lean business model, and very, very strong company in terms of the fundamentals. So that is why the number one reason why I own both Alibaba and Facebook stock. Number 4 is the one that I get a lot of shit over. It's definitely deserved because I started buying this stock way too early. It has definitely been a learning experience for myself, and that is General Electric, trading under the symbol GE. And the reason why I'm buying this stock and why I own this stock is that, in my opinion, this company is simply too big to fail, and they are a time-tested company. This company has been through it all. They've been through the Great Depression. They've been through all of the stock market crashes. They made it through the 2008 crash when GE Capital was basically sinking the entire company, and they've been able to weather every single storm. Now, I've done a couple of videos on GE since, so if you guys want more information on why I own this stock, go ahead and jump over to one of my other videos. I'm not going to go into that detail here, but I believe that it is too big to fail. It's time tested, and I see this company as having some very strong companies, some very strong franchises, primarily aviation and healthcare. I think those are the two strongest units for them. And what General Electric needs to do from here is pay down some of their debts, simplify the business portfolio, and focus on the core businesses that have worked for them in the past. They just became too scattered and went too heavy into one business, the power business. But again, that's going to be a conversation for another video. I'd be happy to make video after video about General Electric, talking about this company. And then number 5, the 5th stock that I own is JD.com. They trade under the symbol JD. And this gives me, in my opinion, diversified exposure to the largest e-commerce market, which is the Chinese market. Yes, I am heavily involved in growth, technology, and e-commerce with this portfolio, but it's a tolerance, or it's a risk that I am tolerant of and okay with. You have to stomach a very large amount of risk to be so heavily involved in technology companies and e-commerce, but it's something I'm personally completely fine with. And the main reason for that is because the way that I am set up, or the way that my business is set up, I generate a lot of cash from my business, and I'm able to funnel a lot of money into these stocks. And so my number one concern is not buying these stocks at the perfect time or the perfect price. I believe in these 5 companies because of these reasons I outlined here, and so I'm regularly contributing more money into this portfolio, usually $3,000 to $5,000 per month going into these stocks. Now, beyond that, I also have 3 other items in my portfolio, and those are my index fund investments. And so basically my goal here with my stock market portfolio is to eventually have half of my money in my individual stock selections and half of my money in index funds with the dividends and distributions reinvested, because I know that odds are that I will not beat the market. And if I don't, then half of my money is invested in owning the market. So it's kind of a hedge against, not beating the market with my individual stock picks. But again, I'm a long-term investor, and these are stocks I plan on holding in most cases for 3 to 5 years, if not more beyond that. So we're really going to see how these picks do over the next couple of years. In the short term, I look like a complete moron. I'm well aware of that. But in the long term, I do believe in these companies, and I personally see value in them. And if you're curious what my index fund picks are, it is VXUS, which is the Vanguard Total International Market, which does not include the US. It is VBK, which is the Vanguard Small Cap Growth Fund, and then VV, which is the Vanguard Large Cap. The reason why I do that is because rather than holding VOO, I like to have more small cap exposure. It's a more aggressive investment, but as a 23-year-old, I can afford to be a little bit more aggressive with my selection. So I like to be heavier involved in the growth stocks rather than investing in large cap stocks. But those are the index funds that I own within my portfolio. But anyways, guys, that's going to wrap up this video. I've decided from this point forward on my channel that I'm only going to be talking about stocks I actually own. I know in the past with my top 5 picks for 2018, with some of the other stocks I've talked about, I was talking about stocks I didn't actually own within my portfolio, and I felt that I wasn't offering much value by simply talking about stocks and not actually owning them or putting my money where my mouth is. And so I've decided that I'm only now going to talk about stocks that I actually own. And so hopefully you guys are okay with that. Hopefully you're accepting of that. And if I do add more stocks to my portfolio, I will let you guys know, and I'll also let you know as I'm adding more cash and contributing to my investment portfolio. But I just wanted to let you guys know in case you were wondering about that. Anyways, guys, that's going to wrap up this video. I hope you enjoyed it. Like I said, if you want to grab that free stock worth up to $1,000, that is the top link in the description below. It's an affiliate link. You guys don't have to take me up on it, but it's available to you if you are interested. But thank you so much for watching. Let me know what you guys think in the comment section below, and I will see you in the next video.